What's going on, guys? What's going on? What's going on? So currently we are watching the NASDAQ 100 in a little bit of a long position here. Got it over this break. Reason why, if you kind of look at the downturn today, so we had massive numbers off that CPI, right? So we had the big, whatever, right? CPI good, CPI bad. But if we kind of look at where we started, at 5:30 in the morning, we had that big initial pop, and then we had a nice little sell-off all the way back down to the bottom of the range. Now we're currently looking at the 5-minute time frame here, and pulled all the way back down to the bottom channel here. This is a linear regression channel 50. If you guys want to pull it up on your charts, linear regression channel 50 is where we pulled down to. Then we had a little bit of a pause. We kind of came back up, reclaimed the 20 period moving average. Now we got stuck here in all of this supply. So if you notice on the chart, very, very confusing here, very congested, right? Anytime you get into a level like this where you've got all of these supply and demand zones, you kind of want to just stay the hell out of Dodge, right? So what I was initially looking for is, can we break this consolidation, right, that we've been in for the past, I don't know here. Let's see if we really look at it since 8:55 Pacific Standard Time. So just about a little over an hour. We had a lot of consolidation here, but kind of holding this purple line, which is a 20 SMA on a 5-minute time frame. If you look at 8:45 a.m. on my chart, 8:45 a.m. on my chart is showing that change in trend, short-term trend, because this is a 5-minute time frame. Change in trend over the 20 period moving average. Now we did have some room to stretch. This is kind of where I got into this position. Started off very, very small, only went with 1 micro to start, right? Again, I'm already up over $500 on the day on my prop firm futures trading. So, you don't want to, anytime you're up like that significantly, right? And we're not even talking about, thousands and thousands of dollars. But if you kind of look at it, you're up $200, $300, $400, $500 on one of your accounts. You don't want to give that shit back, right? So I got in here small, waited for this consolidation, kind of was pissing me off a little bit, just due to the fact that I'm only reason why I'm a day trader is because I'm impatient, right? I hate fucking swing trading. I don't do any investing, because the way I look at it, you can make the same kind of return on investment with your capital as if you're going long, right? Let's say someone who's been long 1, 2, 3 years, they've been constantly, buying stock. They had to sit through, a year and a half worth of downtrend, and then you just get caught in the clusterfuck. So basically, the way I look at it with my personality, and everyone's personality is different. I know tons of traders who are amazing at swing trading, tons of investors who can just, kind of allocate certain amount of funds each paycheck or every month or every quarter, to the stocks that they believe in and they trust. But if you kind of look at, what we're doing right now currently, it's a perfect time to make money, even when we are kind of range bound trading, right? We come to the bottom of the range, you kind of understand and identify, okay, where potentially could we stop? If we do bounce, potentially where could we go? And that's basically what it's all about, is just kind of understanding, potentially where could we go? Potentially. It's always about potentials. Day trading is a game of probability. So anytime you get into a trade, there's a probability you're going to be right, or there's a probability you're going to be wrong. It sounds easy enough, right? And I'm going to sell this position here, kind of lock in those profits. But so currently on the day, 428, obviously minus commissions and fees and all that other bullshit on one account, and up 185 on another account. So if you look at it, up almost $600 on the day, on a very, very light day. CPI data numbers, a little bit of a choppier range here, but it is what it is. And what you kind of have to look for now is, a lot of traders I see, especially on social media, where's the market potentially heading? Are we going up? Are we going down? And one thing that was getting thrown around a lot this morning is, some traders and even good traders, really big time, YouTube traders, really big time people in the, FinTwit space, kind of saying, get ready for today. Get ready. Either we're going to 420 or we're going to 400 on the S&Ps. It's like, guys, the way that the market has been trading is essentially trading the way it trades every day. Understand your technical levels, understand where potentially these stocks can go, and get in where you fit in, right? We don't need to look to one catalyst to try to make money. We don't need to look to one event or one news headline to try to make money. Stocks are moving each and every single day. It's your job as a trader to identify the best possible setups that have the best potential, measured potential moves that you can potentially get into to try to make a little bit of money. And at the end of the day, I will tell you, it's not about what strategy you're playing. You know, some people are like, oh, do you use VWAP or do you use supply and demand? Are you strictly price action? Do you play, you know, the fibs, this, that, and the other? Guys, every single strategy is just an edge. Every edge has potential to make money, but the person sitting behind the strategy, which is you, which is me, has to also manage that risk and manage that edge. And if you don't understand how to manage the edge and manage the risk, you're going to get chewed up and spit out 9 times out of 10. Are you going to make some money on some trades? Sure. How many times have you guys taken a trade, right? Taken a trade and it just goes, right? You make money, you get into the trade, you know, 30 minutes later, an hour later, you know, maybe even a day later, you're just positive on the position, right? That kind of shit is going to happen, right? But how many times have you got into a position where it kind of stalls out, it goes sideways, you go into a little bit of drawdown, and then you're kind of sitting there, maybe you add to the position trying to hope and dream that it comes back. Next thing you know, you're 2 days later, you're playing options, you know, your options are down 60, 70%, you got a small account, then you're kind of wondering, you know, what the hell happened, right? What the hell happened? So when it comes to trading, right, this is the one thing that I want to focus on, and this is what I tell everyone that's you know, in the community, all the guys that I trade with. The objective is to stay in the fucking game, right? That's it. It's all about keeping the lights on. Imagine you're running a retail store. I don't care. You're running a 99 cents only store, right? You have to manage that inventory accordingly, right? You have a hot selling product, you sell out of the product, you don't re-up on the product, you spend all your money, you spend all the profits, you're going out, you're taking your wife out, you're going to the club, you're buying bottle service, all this shit. You don't have any money to re-up on inventory. Guess what happens? You can't sell any more fucking product, right? You don't pay the light bill, you don't pay, you know, your POS terminal system. Guess what happens? You're no longer in business. It's the same way. Stop looking at trading as trying to get ahead super quick. Now, I'll be the first to tell you, can you come into the market with the right amount of capital, make a shit ton of money really, really quickly? 100%. But you can also lose a shit ton of money really, really quickly as well. So even though we're day trading, even though we're short-term swing trading, yes, the idea and the probability and the expectations are there to make money fast, right? Versus someone who's a long-term investor, say with a 10, 15, 20-year horizon. However, if you're not in the game for the next 5, 10, 15, 20 years, managing that capital, you're fucking shooting yourself in the foot, and you're going to be out sooner than later. How many traders came in that you've seen, you know, my fucking Uber driver, my waiter, my mom's, coworker, who's like 65 years old, was telling me in 2020 how much money they were making in the stock market. Someone told them to buy this, buy that, hold it, whatever. They made a shit ton of money. And guess what? Most of them, 90% of them, lost all that money because they had no idea what they're doing. They had no idea, they came into a raging bull market. Everyone's making money. Everyone's, having a great fucking time. And then when times aren't so great anymore, guess what happens to those people? Guess what happens to those new traders? They lose a shit ton of money. They bounce around from strategy to strategy. They go from mentor to mentor, or YouTube channel to YouTube channel, or, friend to friend, asking what they should do. And in the end, all you're really trying to do is compensate for, right? You're trying to compensate for your mistakes, your fucked up decisions, right? And that is what it is. Learn the game, learn how to stay in the game, right? And take money when you get it, right? Take money when you get it. Now, sure, have I got into trades sometimes? I get into a trade, say for example, when I'm trading options, some of the biggest stocks that I like to trade, Tesla, Nvidia would be my number 1 and 2. I love to trade those stocks, trading them multiple times a week, right? How many times have I got into Tesla long or Tesla short? I take $1, $1.50 on the move. I take 10 contracts. I make $300, $400, $500 on the particular trade. Next thing I clock out, get a coffee, go to lunch, come back. I look at the fucking chart and it's up 5 points. 5 points, right? How many times has that also happened to you where you get into a play, you sell too early, or let's say, for example, you get into the play, it goes up 50 cents, comes down $1, shakes you out, you look back 3 hours later, and you would have been right on the move if you just would have held a little bit longer. If that's happening to you, you're oversized, because if you can't kind of manage those risks and manage that risk and manage that emotion when you're in the trade, you know, you get shaken out a little too easier. But I have no problems taking $1, taking $2 off Tesla, taking $1, $2 off Nvidia, calling it a day, being okay with that, right? Because when you're okay with that, you're able to keep the lights on and continue to trade. Now, sorry, I got off on a little bit of tangent, but you know, that is what it is. Do I live trade every day? I do not live trade every day on YouTube. Thinking about it, kind of setting it up. I have done it in the past, kind of go over the market, you know, depending on when it's slow. Normally, I'll kind of jump on during that New York lunch hour, just due to the fact that price action gets a little bit more slower, gets a little bit more choppier, and then we kind of set up into what's going to happen for tomorrow. Now, is there some opportunities to make trades in the afternoon session after lunch hour? Of course, right? Sometimes there is, sometimes there's not. So that's why I kind of like to do my research and my data going into tomorrow, kind of during that lunch hour. So sometimes I will hop on. I'm going to start doing it a lot more, right? Normally what I'm doing every day during the market open is I'm in the Discord. I'm talking to the other traders that I trade with, and we kind of go over all of our ideas, and then, you know, we kind of bullshit during the day, during the soft hours, right? Meaning that, you know, when there's nothing going on, we'll sit there and shoot the shit, you know, about whatever, right? We'll about whatever, but we'll kind of always constantly trading. And yeah, I mean, we're in there 5 days a week, you know, from market open to market close, and people are, you know, in or out. Sometimes people come in, they make money in the first hour, we don't see them again for tomorrow. Normally I'm in there every day. I will be in there every day, and then I'll come across charts, and I'll kind of post them up. Like, for example, one of the plays, I put 2 plays in there that I'm kind of watching from the weekly time frame, right? Because not everyone is a day trader. Not everyone wants to catch the big, you know, the moves intraday, right? So let me take all this nonsense off the screen. So one of the plays that I was looking at was Meta, right? So I'm looking at Meta. If we look at Meta's daily, or excuse me, weekly chart, look at the beautiful fucking run that we had on Meta, right? So if I just go back on the weekly time frame and I go all the way back, right? I go all the way back to November of 2022. Meta hit a low price of $88. Meta is currently trading at a price of $216. So to everyone who says that the market needs to go down, says who? Says who? The market needs to go down because you want it to go down, because you have been conditioned and you're so used to the market going down. Meta's up over 150 points, right? 130 points in the past 6 months, right? Phenomenal bull run. But if we kind of look at Meta, this is why I was watching it. You know, if we look at Meta's weekly chart over 217, what we need to do is we need to break 217, right? I'll get to you right now in a second, Carlos. We need to break 217 on Meta. We need to put in a new high, but if we kind of look at it, we're testing last week's high, right? We're testing last week's high. We're currently power trending, and we've been power trending on Meta essentially all year, right? Essentially since the breakout, since the reclaim of the 5-day moving average on a weekly chart. That's the green line. Okay, got this initial breakout in November. We broke it, we consolidated for 4 weeks, we back tested it, we consolidated for 3 weeks, and then we exploded. Okay, now when we get to February, we pulled back for 3 weeks. We pulled back for 3 weeks straight, okay, on Meta. And I'm sure there was a bunch of people on social media crying that, you know, the world's coming to a fucking end. But all we're doing is back testing the power trend, and then we push off, and then we back test the power trend, and then we push off. So as we stand right now, we are 1, 2, 3, 4, 5 consecutive weeks higher on Meta. Meta is looking for a breakout. Now, I know there's going to be some FOMC. Is the market going to take a little bit of a pause? Is the market going to go higher? Well, that's why we have to do our research, right? Because it doesn't matter. If the market goes higher or lower, we can still take advantage of both sides. That's the beauty about being a trader, right? But if we look at both sides, right, this looks like a great play to the long side. This looks like a breakout. And if we do break out, we could potentially test 230s on Meta before any significant back test. So you're going to want to be a part of that move. That's 10 to 15 points higher on a stock like Meta. how can you be a part of the group? There's a couple of ways depending on what you would like to do. So if you just want to join the community and you just want to get in Discord, right, which is a chat room where you can kind of shoot the shit, kind of talk to the guys, kind of pick up things as you go, ask some questions, you can definitely join the Discord. I believe the link is in the description. I should have it set up so you can join. If you want to learn a little bit more about trading, like you want to understand strategy and you want to understand risk management, how to control your mindset, I also do one-on-one coaching. I've kind of like compiled 5 hours of me ranting and talking and kind of going over my strategies in real time, put that up into a course. You get lifetime members, lifetime access to that, as well as the Discord. So it, you know, it is what it is. I don't really make these things to kind of sell anything, just due to the fact that I don't really make my money that way. I make my money trading, right? But again, when I do have people, traders who have become friends now, right? I mean, I have people in the group now. I've been trading with them for 2-3 years, and I consider these people great fucking friends, right? Because the way I treat the community, which is not just a community for myself, because let's be honest, trading by yourself is boring. The whole reason why I made the Discord in the community is to get that live trading room action, right? You want to wake up in the morning, you want to get fucking amped, right? Now, how many times have you guys heard on social media where people are saying, you know, trade with no emotion, this, that, and the other? Yeah, you want to understand that you are going to lose. You're going to lose a lot. Like, for example, myself, and I posted it in Discord this morning before I took this last trade. But I was on one account, I only hit at a 55% win rate. I took like 13 trades, baby scalps, right? On the other account, I hit at 75%. If you kind of average that together, that's around 60%, which means that every 10 trades, every 10 scalps that I take, I'm going to lose 4 or 5, but still fucking profitable, right? And that's what a lot of people don't understand. You think that a lot of traders, right? There's a lot of traders, especially I see them all the time. They think that, you know, if you have a winning strategy, it means you win every single time. That's just not the case. It's just not the case. What you need to do is have emotions, right? Have emotions, but understand that this is probability based. You are going to lose trades. You are going to win trades. You can get excited when you win trades, but just don't assume that you're going to win every single fucking trade, right? You can be you know, pissed off when you lose a trade, but understand there's always another one. I tell people this: the stock market has been here way before I was around, and the stock market's going to be here way after. So why is there a rush? Why is there a rush to make money right now? Why is there a rush to make money on every single trade? I hope that makes sense, right? Yeah, so going back to the you know, how to trade with me. It depends on what you want to do, what your level of experience is. If you're completely new and completely green, well, then definitely I would recommend learning a strategy, learning emotions, learning how to handle those emotions, learning how to handle wins and losses, learning when to buy, when to, you know, sell, learning, you know, that where potentially these stocks can stop and where potentially they can go, right? When we clear out a level of supply, like I noticed there's a lot of people who now trade supply and demand, right? Supply and demand. They trade price action. Okay, I get it, right? We got a breakout, we got, you know, a flush, we got a level of a period of consolidation, and then we get another breakout. Yeah, okay, that's all great. We all understand that. But where is that going to go? Where should I be taking profits? Where potentially should I be putting a stop loss, right? We have to understand. So the reason why my chart looks the way it does, right? The way it looks the way it does is because I want to understand where potentially these stocks could be heading. Where potentially should I be taking profits? Do I have $1 in the trade? Do I have $2 in the trade? Is there only 50 cents? Is there 25 cents? If there's 25 cents, it's not worth it for me. Especially when I trade equities, I only trade options, right? I've been trading, or when I trade stocks, I've been recently trading equities, which is trading shares as of late, right? But normally I'm an options player, and then I trade futures for the prop firms, just to kind of, you know, supplement more income on top of it. Do I invest in real estate? I'm a realtor in Las Vegas and California. What part of, yeah, I mean, yeah, I do. I own 2 properties here in California, right? Looking to actually sell one of them because the where I bought, I'm in Southern California. I don't know if you know where Santa Barbara is, in Ventura County, but when I bought this house, it was $635,000. Currently, is up about 300 or so, right? The last property that sold down the street for me sold for like 928 or something. So right now I'm looking at cashing out. Only thing that I don't want to do is I don't want to cash out and then have to roll that over, right? I don't want to have to roll over that amount into an equal value home, just due to the fact that I don't want to pay high fucking interest rates. So I might sell, cash out, right? Take the tax hit or put it into another investment, potentially some Airbnbs, right? Taking some of that, putting into some Airbnbs, and then kind of renting out a spot for a year or two and to kind of let the market settle a little bit. And then also for Las Vegas, before I was in trading full time, I did have another business non-related to trading. I had a warehouse out there, North Las Vegas, not the best part, off of Pecos. So let me know if you know where Pecos is at, but I had a sales office and distribution center out there in Vegas. Yeah, definitely love Vegas. Actually going out there next weekend. Gonna do a little bit of partying for my one of my best friends' bachelor parties. So should be a great time. You're from LA? Perfect. Yeah. So you understand how crazy the fucking market is. Things are crazy right now. Good time though. Not a lot of people are selling. They want to hold on to those interest rates, 2-3% interest rates. I refied back when interest rates are low, so I'm in the low threes. So it's kind of hard to give up that payment from the low threes. So Meta was the first one to the long side, the other one to the short side, right? And this is for people who want to kind of sit a little bit. They want to sit on potentially a short position if we do wash, and I'll make this a little bigger so everyone can see it. So if we do wash, kind of look at where we're at here on NVIDIA. So we're holding and we're hugging. Hopefully you guys can see this. We're holding and we're hugging this 5-day moving average, right? Looks like an inverse hammer candle getting ready to set up. Last week's lows on NVIDIA is 264, right? 264. If we potentially start to crack 264, is it the end of the world? No, it's not. But there's a potential amazing setup to the downside that we can capitalize on. The next support, right, which is demand, next demand zone on NVIDIA on a weekly time frame. So this is for swing traders. Even scalpers can take this on a day in and day out basis. Take a point here, take 2 points there. But below 264 has room to 247. By no means does that mean as soon as price action breaks 264, we're going to 247, right? It doesn't mean that, but that's where we understand. That's our measured potential. So for people who trade options, this is a trade that you want to get into. Now, what you would want to see is on a daily candle, you want to see us close below 264, okay? As soon as we close below 264, we want the next day to open up, either go sideways, a little bit of a bounce, and then we want to lose that new low through 264. That's our opportunity to get short. We use the daily 5-day moving average as our stop, or the previous high as our stop, and then we kind of just ride it. We ride it, depending on the position size, and you're going to take profits along the way down. You live in Las Vegas? Nice. I still have a couple buddies that used to work for me that stayed out there. I got one guy in Summerlin, right? I got one guy in Summerlin, and I got another guy who lives out in Henderson. Great spots, right? I mean, great spots. Great spots. And Vegas is growing. I'd like to see the real estate prices in Vegas come down a little bit, because they really kind of shot up there for a while. I've noticed that, because I check on the regular. I have noticed that they've been coming down a little bit, which is good. But you still get, I mean, compared to the prices out here in Southern California, right? Compared to the prices down here in Southern California, Vegas is definitely a better option. You also do investments, private money loans. All right, awesome. Yeah, join the Discord, get familiar with everyone. Definitely keep you in my contacts, bro. So right now, kind of just hanging out. What I'm actually looking for, I'm waiting for these FOMC, the FOMC here. I believe it's going to be like in 30 minutes or so. I don't expect too much of a reaction, right? I don't expect too much of a reaction, but again, maybe there's a potential trade in there. Maybe there's a potential trade in there. Keep it light, right? That's the thing. I want to keep it light. I want to keep it light. That's the last thing you want to do, especially if you're up on the day. You do not want to give away profits. So also, if we're looking at stocks now, right? Because I'm looking to trade some futures, but if we're looking at stocks here, there's a sneaky area here on NVIDIA. So let's say the market pulls. Currently, right now, NASDAQ trading at 16, up 16 handles, right? 16 and a half or so. If the futures pull in, let's say the futures pull in, right? And they go from green to red. And if you start to see NVIDIA lose, the previous hour candle here at 268.79 potentially has room to 268, right? So if we look at that, we've got almost 80 cents to $1 in this move. And if we confirm this 5-day moving average on a 1-hour time frame, our maximum potential is down here to the Bollinger Band at 266, right? Let's call it 267 because it's 266.90. Potentially there's $1 to $1.50 room down. If we look at the upside, right? If we look at the upside on NVIDIA, look how stacked all of this supply is. You got one on top of another, on top of another, on top of this. Grind higher 100%. But by grinding higher, it's going to give you a lot more fake outs, right? Especially if you're watching a smaller time frame like the 5-minute. You're going to have a nice pop. It's going to pull down. It's not going to really seem like it's going anywhere. Right now, what we're looking at is a little bit of a bear flag on NVIDIA. So if they do yank the market, I would look for a scalp for all scalpers below 268.85. Look for that 80-cent push. Let's say, for example, we're playing 2 contracts on NVIDIA. I would sell one there. I would hold another runner for break even or breaking that price point to at least test the 297. That's a potential $2 trade, almost $1.50, $2 trade to the downside. That's fantastic money. That's fantastic money, right? Yeah, good. I mean, yeah, if they come down another 40, 100K, that would be definitely something that I would be interested in. Definitely be something I would be interested in. When I was looking, when I had my shop and my warehouse out there, brand new development was selling for around 385, 450, right? Nothing major, right? We're not talking about nothing major, right? 385, 425, new development. Then it kind of shot up to like 550. I even seen at one point in time close to 600,000, 525, 585 in that range. I'd like to see him come back down again. Obviously, I don't think that we're coming back down to, 300,000. I don't think something that's selling currently for 500,000 is coming back down to 300,000. But if it can come down, low 4s, would definitely be worth it. Or something mid 4s down to high 3s, definitely be worth it. Definitely be worth it. Definitely would be worth it. So again, watching this NVIDIA here through the previous hour's lows, again, we can just sit here and watch this. Not really going to take a trade on it just due to the fact that not looking to trade options anymore. I'm already green on my options account, not looking to kind of fuck this up. But what I'm looking at here is this is all screen time. So when you hear about screen time, you hear about backtesting, this is what you're doing right now. Potentially, right? Potentially on this previous hour's low loss, do we come down and test 268, right? This is what you need to make mental notes of. Do we come down to 268? If we did, how much money would you have made? Was there 40, 60, 80 cents in the trade? Now, if you took 10 contracts, you took 5 off, you left 5 for break even stop. Do we come down and potentially test 267? Now again, if we don't get below this and start to push down here, well then there's no trade, right? There's no trade. Let's kind of see what Tesla's doing. Tesla, same thing here, same thing, same kind of chart setup. Tesla looks a little bit more weaker on an intraday perspective than NVIDIA. But if we look at Tesla, this is a short here for a scalp below 183.40s, right? Currently got down to 183, right? So we're down about 50 cents. This Bollinger Band here, if this Bollinger Band starts to give way, we could potentially be looking at 182. Potentially be looking at 182. Right? 182. Anything below 182 on Tesla, we got to go to the daily time frame. We got to see a bigger level here. Right? So if we look at Tesla's daily, right? If we look at Tesla on the daily, yesterday's gap up a little bit of a fluke. I came on, did a short 30-minute live. There was money to be made long yesterday on Tesla on a little bit of a gap and go, not too much room. We got rejected right at the 20-day moving average, right? That's the purple line here. I'm trying to go over it. If I bring up my drawing tool here, this level we got rejected yesterday. If we kind of look at where we're at today, we made an initial pop higher, right? An initial pop higher into the 10-day moving average, right? Which is declining. We got the 50-day moving average right above it, was rejected. And not only rejected, but rejected stiffly, right? Stiffly. So if we look at Tesla's daily chart, it looks like shit, right? So if the market does roll over, we do have room down on Tesla. So the way I would be looking at Tesla, right? If someone is not currently sitting short on Tesla, I would be looking at tomorrow. Any type of green open, any type of gap open, any type of flat open, right? Some consolidation. I would be looking for a loss of today's lows below 181.75. Below 181.75, that's my indication to go short. I'm looking at a 176, 177 price target, right? So we have potentially 3, 4, 5 points down on Tesla. No reason to really chase this unless you're a scalper, right, today, because this is already setting up for a fantastic opportunity tomorrow. But if we kind of look at it from a 5-minute perspective, right, a 5-minute perspective on Tesla, well, then it looks like as soon as we lose this channel level, right, below this 182.90s, we start to close below that, right, get another 5-minute candle to confirm that. Well, potentially we can come down here and test the day's lows at 181.82. So there's not a ton of room. You got maybe $1 worth of room there. That's why I say it's kind of hard to chase this move today. Right, today, unless the market rolls over. And we look at the NASDAQ futures right now, we were up 16 points, now we're down 2 points. If you start seeing the NASDAQ futures be down 30, 60, 100, then you for sure know, because Tesla is already weak, you for sure know that this thing's coming down. So you always kind of have to correlate to what the futures are doing, right? And that's /NQ. If you don't got that, just watch the Qs. It's the same shit, right? Watch the index. It's the same thing. If Tesla starts to break below this channel level here, well, you can see as we're holding the bottom of this channel, the next demand zone's down here at 178. I'd be looking for a push down into 178 tomorrow. If you are short on Tesla, like for example, the strategy that I teach, someone should have been short Tesla since around 6:45 Pacific Standard Time. 6:45, and here's the break here on Tesla. 6:45 Pacific Standard Time gave us a short entry. We never have looked back. So potentially, right, if you follow the strategy, if you follow my supply and demand strategy, we would have been getting into Tesla here at 188.38. Now, I initially took a short position on Tesla this morning. I took 10 contracts, right? I waited for the consolidation break, and as soon as we lost a 50-period moving average and the 200-period moving average on this candles, I sold, right? And that's the thing. When it comes to trading, you're never going to catch the whole move. You're never going to catch the whole move. You're going to catch a small piece of the move, and it's just all about compounding those gains. So like where I sold when as soon as we broke through all this level in demand, we started pushing, really pushing down into the Bollinger Band, somewhere here in the 186s, 186s and a half. I think it was 186 and a quarter when I sold. But if you look at my entry, right, my entry was only 187.40s. So I only made $1 on the trade, but I took 10 contracts, right? So 10 contracts and make $1 move. Is fantastic. Now, obviously, if you're playing one contract, your risk is not as big as playing something like 10 contracts. You can hold a little bit longer, right? And if you would have held a little bit longer, we didn't even get a sell signal until we got out at 184.45. So from a price of 187.40s to a price of 184.50s, it's a $3 move. You know, even on one contract, the $3 move is fucking fantastic. Tesla's coming down, testing the low of day here. Again, double bottom as of now. Low of day, 180s. We've got a little bit of room there still. So if Tesla does break this low of day, it's got room down to 178 on a macro intraday perspective. So definitely keep an eye on Tesla for all you Tesla traders out there. Again, looking at the 1 hour time frame, what I'd like to see here is to take out the lows. If we can take out the lows on Tesla, I would be interested in a scalp. I'd be interested in a scalp below 181.80s. Below 181.80s, I might be interested in a scalp here on Tesla. We need to see it set up. Now, you can build into this position, and it depends on, you know, what your account size is, how well you manage risk. But if you're going to build into this position, just understand you're going to give yourself $2, $3 risk. You know, everyone loves to trade Tesla and Nvidia and, you know, all these high flying stocks. What people don't like is when you have to sit down through $1, $2, $2.50 worth of drawdown, right? Potentially just to get stopped out. The ranges are so big on these stocks. If we look at where we opened up on Tesla and where we pushed to, we came to a price of 191, currently trading at 82s. So what that's telling you is there's a 10-point risk in Tesla. There's a 10-point range there. So if you're sitting through Tesla, long or short, right? I'm talking about any day, you're sitting through Tesla and you're up, down $1, down $2. This thing can move 8 to 12 points in a day, intraday swings, right? So it's not that big of a move. If it's too much for someone to handle, you gotta trade a smaller stock, right? Instead of trading Nvidia, trade AMD, right? Trade AMD. You know, the ranges, Nvidia might have a $3 range all day. Nvidia is probably gonna have a 10-point range all day. Let's see what Nvidia's range is today. Nvidia opened up, tried to test the pre-market highs here at around 274.78. Let's call it 275. Came all the way down to a price of 265, a $10 range. That's a $10 range, guys. That's a huge range. So the point I'm trying to make is that with a stock that has, you know, 5, 6, 7, 8, 9 points in its average true range, there's areas of opportunities for you to make some money. And going back to the Nvidia here, what did I say, guys? What did I say, right? We didn't trade this, but I wanted to kind of follow it. So if we lost previous hours lows, we understood based on supply and demand that we had potential to come down here and test the next area of demand, which was the 267, right? The 267. So the entry price on it was 268.80s, right? 268.80s, losing the prior hours low, a lot of room down to the Bollinger Band. The only bit of support we had here was the declining 5-day moving average, right? So the entry price was a confirmation on this hour. So my hour on Pacific Standard Time is 10 a.m. So this 10 a.m. candle, if it confirms the 9 a.m. candle's low, and we have room down, which we did, that was your indicator to go short. Where would we be taking profits? I'm going to speak from someone playing options contracts. You're playing 2 contracts. Your first take profit was at the next area of demand. That was the 5-day moving average. We hit that, right? Now it's still going to decline because the price action is moving lower, but we hit the initial price target around 268.20s, okay? Entry price was 268.85. So if we look at it, we're almost down 80 cents. But that quick of a move, guys, within the 10 minutes, you take 80 cents on 1-2 contracts, you're up $40, you're up $50 relatively quickly. If you want to make more money, you got to increase your size. A lot of traders think that in order for you to make more money, you need 20 fucking points in the move. You need 50 points in the move. You don't need that many points. You don't need to hold these things for days on end. What you need to do is increase your size and tighten up your risk, right? So you go 10 contracts, you get a 50-cent move, you're going to be up $300-400. Just like that. Just like that. You get out, call it a day. Call it a day. So as of right now, if we're just kind of speaking from a teaching perspective, we would have sold one contract, right? 268.80s. We would have sold the last 268s, right? In the 268s, right around that 268.10 mark. So we made 60-70 cents on one particular contract. That contract was probably up 12-15%. You know, depending on how fast it moved. I mean, I'd have to go back on this live stream and kind of see when I was talking about it. Probably, you know, let me go to the 5-minute time frame when we were talking about it. So realistically, when we lost this whole level here, this 268.80s, right, also gave us an indicator here. You can see my red arrow gave us an indicator here to kind of get short. We would have gotten short at the 268.80s, 268.90s. We got a little bit of support here on a 5-minute time frame, 268.20s. Made 60 cents on the trade, right? 60 cents on 10 contracts is great money. But right now we would be holding, we would use a close back over the 20 SMA on a 5-minute time frame to break even on the remaining contract. We already locked in profits there. So this trade, even if you only traded 2 contracts, is a winning trade. How is it a winning trade? Because you locked in profits at the first area of demand, which was on the hour time frame, the 5 SMA. If you were watching the 5-minute time frame, it would have been the 50 SMA. Right? We would have locked up a 60 to 70 cents on the initial move. We'd be holding our runner right now for break even. Any close over the 20 SMA on a 5-minute time frame, that's our out. That trade's a break even trade. We just walk away with the initial contract profits. However, if we do give this up, if we start to give up 268, well, potentially we have room down to 266. That's going to be a hell of a fucking trade if we can get down to that, right? Hell of a trade if we can get down to that, especially on a midday scalp like this. You know, volume is a lot smaller. The price action's moving a hell of a lot slower right now. So any move that we get this late in the day, and for me, this is late in the day, majority of my trades are going to come between 7 a.m., right? Between 7 a.m. and around 8:30 in the morning, right? That's where I make my bread and butter. And then the rest of the day, I'm kind of just watching. Right now, what I'm looking for is what looks good today, right? What I want to buy today, what I want to short today, I'm going to love it tomorrow. I'm going to love it tomorrow. That's the way I look at it. So I don't look at after New York lunch hour as what can I trade? What can I get into? I look at, I like this particular trade south, or I like this particular trade north, right? I'm going to love it tomorrow. So let me go ahead and let the market do the heavy lifting for me today, right? Because as good as NVIDIA looks short, right? As good as NVIDIA looks short, do I want to get into something right now and run the risk of getting chopped up, run the risk of giving back days profits, run the risk of getting stressed out when I'm already green, right? Or would I rather just wait for tomorrow, let the market do its thing, and then kind of go with the move tomorrow? Because again, there's no reason to chase today. The only reason someone's still trading right now, they're a little bit more experienced and they're looking for scalps. Like on this particular NVIDIA trade, 50 cents, 60 cents, that's what you're looking for. You're not looking for NVIDIA to wash out 5 more points. If NVIDIA lost 5 points today, well then, hey, you got to tip your hat to the market. You know, it is what it is. Let's take a look at the SPYs really quick. Take a look at the SPYs. We're going to start off with the daily time frame on the SPYs. Daily time frame on the SPYs. SPYs, I mean, actually look good, right? SPYs look good. So if we look at where we were trading at yesterday, right? We kind of came down a little bit, put in a high, came down, tested the 5-day moving average. Today we lost that 5-day moving average, right? That 409 area. We came down to what, guys? To what, right? To what? Look where we came down. You can't even make this shit up, right? You can't even make this up. We come down and test the 10-day moving average on a daily time frame, and we bounce. If you're a bounce trader, you know, you had to be all over that. You come down here, you bounce it off the 10-day moving average, and hell, if another hour candle opens up and you lose that low, well, then you get the hell out of the trade for small fractions. It's all about risking pennies to make dollars. So let's continue on with the analysis here. We come down into the 10-day moving average. We get this aggressive fucking bounce off of 408, right? We reclaim. Now, depending on your level of experience, if you take the first initial bounce off the 10-day moving average, you got to be taking profits into the next area of demand. So there was not a lot of room on the initial bounce unless you had intentions of holding, right? Intentions of just holding. Because the first initial bounce came from 408.10 to 409.30s. So again, depending on how much size you're playing, that's $1.25 move, right? If you're playing options, you take 10 contracts to get $1 move on the SPY. It's, you know, fantastic, right? Fantastic. I would have taken the reclaim, right? So a reclaim is when we lose a level of demand and then reclaim it. So the green line here, let me bring up my drawing tool. This green line here is the 5-day moving average. So even though we came and we lost it, we came down and bounced off the 10, I would have waited personally, just due to my trading style, my personality. I would have waited for the bounce here, said, okay, chalk up the $1.30 bounce, but I would have taken the reclaim of the 5, and that bounce I would have played into yesterday's high of day. So if we kind of look at that, right, this is the way I trade, right? Let it bounce, let it reclaim, right, 409.40s, and I'm going to play this into taking profits at the previous day's high. Now, could we completely shoot up to 413? Absolutely. But if I take it from 409.30s and I start selling into previous day's high for 1080, you know, 411.7, 411.20, I would have been all out, right? Would have been all out. So you're talking about a $1.80 move, $1.50 move. Same move that you would have taken if you would have bounced it here, but it's just my trading personality, my style. I like when we lose a level of demand. I like when we bounce off another level, and then I like when we start to reclaim it. That's when, you know, bulls are showing me we're fucking strong, right? We're strong. And the market as a whole has just been, it's been funny, right? Because a lot of people are thinking, you know, especially like if you just go to YouTube and you type in like stocks or stock market, everyone, you know, has got the big flames in the background and, you know, market recession and crash this and crash that. That gets clicks. That plays into people's emotions. But all you got to do is pull up a chart from January, literally like the first week of January into where we're at currently. Stock market's been nothing but fucking straight up. Right now, have we had our down days? Have we had big intraday pulls? Have we had a string of red days? Of course, right? Of course. But any market, even if this was a downtrending market, you think it's just red after red after red after red, you do get a green day eventually, right? So we got to look at it like that. The market has been holding. The point I'm trying to make is the market has been holding. I think there's one more pop to the upside before we have a significant back test. Now, are we talking about testing October lows, right? So if we look at the SPY and we go to those October lows, let's go all the way back here. It's going to probably get a little bit blurry on the chart for you guys because I'm zooming way out here. So if we look at the October lows, right, all the way over here, kind of highlight this for you. If we look at those October lows on the SPYs, we came down to a low price of 348. 348. We're currently trading at 410. You know, where's World War III? Massive destruction on that, right? Now, did we have pullbacks? Of course, right? February was a jacked up month for trading. A lot of gaps, gap up, gap down, gap up, gap down. Sure. But overall, since the October lows, we've been nothing but straight up on a macro picture, right? I'm not talking about on a day-to-day basis. Of course, you're going to have your green days and your red days. But on a macro picture, right? And I'm going to try to draw this with my mouse. But if I take the lows and I just start drawing a line here, going across, right? I'm not the best artist, guys. I don't have the steadiest of hands. But if we kind of just draw this line here, are we on an uptrend or a downtrend? Should we be more long biased or short biased? So why the hell is everyone on social media saying that we're going to zero, right? I feel like everyone feels like we're going to zero. Why do you want the market to go to zero? Don't you feel like when stocks are going up that the sun shines brighter? Like don't you feel like people walk around with more of a smile on their face when things are going up, right? Does that mean I don't play to the downside? No, I'll play to the downside, right? I am not a bull or a bear. I'm a realist who just wants to make money. That's it, right? I got mortgages to pay. I got bills to pay. I don't have time to sit here and try to predict, CPI data this or what Fed says this. Forget about all that nonsense. Forget about all that nonsense, guys. Stocks are going to go up. They're going to go down, right? Now, obviously, do I want to see the market roll over and go into some deep recession? Of course not, right? Who the hell wants to see that? But just understand that if we do start to lose some important macro levels of support of supply and demand, well then shit, the chart is telling you that it's time to go short. Right now, the chart's not telling us to go short yet. We're still over all of our short-term moving averages, the 5, 10, 15, or the 5, 10, 50 day moving averages. We're over the 200. The chart's not telling us that we're going down, right? Yet, right? Now, there could be a time. I will tell you this, and we can screen capture or we can record this recording, right? This is going to be recorded. If the SPYs lose 391 and 385, we will go lower. Okay? Let's hold me to that. How about that? If we lose 395 and 385, 386, we will go lower. Do we come down to 348? I don't know, but I think 360, 350 is definitely a possible test, right? Definitely a possible test. That would be starting to break a downtrend, but we don't technically break the uptrend. We don't technically break the uptrend until we start closing below 369. Below 369, then I would start to say, hey, things are looking really rocky. What's really going on? Because below 369, we don't have any support other than these October lows. Okay? So until then, we have to take it day by day. We have to go with the day's trend. Now, are some days going to trend up or trend down and make it easy for us to make money? Of course not. On those days, either we need to size down or stay out of the market. Goes back to what I said in the original 5 minutes of this live stream. If you stay in the game, you will make money. If you try to make all your money on one day or in 1 week, you will blow yourself out. I guarantee you that. I guarantee you. Yeah, have a good one, Carlos. Thanks for coming, man. But if you constantly try to guess where the market is going, you will get destroyed. And that's the only problem I have with inexperienced traders. And even if you take a look around, some of your most quote unquote experienced traders that you see on Twitter or on YouTube are new traders. They're new traders. Some of the top people running these big time Discords and these big time YouTubers, they started in 2020. I've been trading since 2015, 2016, and I am new. I'm new. I have not been through all market cycles and conditions yet. Okay? Right? Person I traded with when I started in 2015, 2016 has been in the game for over 25 years as of now. I would consider them a veteran. I would consider them to know their shit. But are they on here, selling the dream? They're not doing that kind of shit because they don't need to do that stuff. These people who are making these bogus call outs every single day on Twitter, it's like, it's a fucking shit show, right? Every 18-year-old to the next 20-year-old seems to know every macroeconomic cycle's fucking outlook, right? Everyone has a fucking thought, right? And that's the problem. That's the problem. Everyone has an opinion about where they think the market is going. It's just like an asshole. Everyone's got one, I can sit here and preach to you that we're going down, we're going down, we're going down. 9 months later, we're going down. I can sit here and look like a hero. I can sit here and say that, hey, October lows are the lows. We're going up, and look like a hero. But it's not about that. It's not about being right. It's not about trying to guess. It's not about trying to identify the top and the bottom, right? All we are trying to do is understand potentially where we could be heading and manage our risk accordingly. That's it. Let's go back and take a look at the NASDAQ futures really quickly. I'd love to catch a little scalp on the NASDAQ. So again, looking at the daily time frame on the NASDAQ, we have tested the 20-day moving average here. You can see this channel level starting to form here, right? We've essentially been going sideways for quite some time now here from a short-term perspective. If we look at the last 1, 2, 3, 4, 5, 6, 7, 8, 9, 9 days ever since we really broke out. The last breakout here on the NAS was on the 29th. We kind of broke out, went on a 3-day run up, and then we pulled back, and then we have failed to make a new high. So for the past 8 to 9 days, we've essentially been trading sideways. That's been the last 2 weeks. If the NASDAQ starts to confirm this bottom channel, right? So if we kind of highlight this, if we start to confirm this bottom channel, we do have room down. And the next stop on the NASDAQ is 12,784. Currently, we're trading at 12,978. So we've got about 200 points to the downside, potentially, right? Potentially. But here's what I want to emphasize, guys. Here's what I want to really emphasize. Before you go out and you start, looking to everyone for their predictions, right? I can sit here and say that if we lose this level, we're coming down 200 points. But that does not mean that everyone should be going short now. The name of the game is patience. We have to stay patient. We have to allow this to confirm for us first, right? So as soon as we start to lose this day's lows and today's lows, then look at the amount of space. Look at this gap that we have here, right? We've got an amazing gap that can get filled before the next level of demand. And it's there and only that point in time is where you're going to want to start to take your short positions. So if we do start to confirm this, let's say tomorrow, and we lose this level here, yeah, I'm going to be short 100%. I'm going to be short 100%. That doesn't mean that I think we're doing this, right? Or that's backwards. That doesn't mean that we're doing this. And this is what everyone thinks that's going to happen, right? No, that's not what an experienced trader does. What an experienced trader is going to sit here and do is just, okay, if we lose this level of demand, we've got a strong level of consolidation over here. That level of consolidation matches up with the 50-day moving average as well as this channel level here. So this whole gap here can be choppy. All I want to do is make money for a little bit on the initial loss. So as soon as we start to confirm this, I want to get in short and I want to make my money on the way down. And then I want to cash out my position, right? And now wait. And then I do it all over again. Do we get down here and bounce? Well, then I'll use the low as my stop and I'll bounce this up. Again, that does not mean that I'm waiting for it to do this. I take it day by day. It's got to be day by day. So again, if we do lose a 20-period moving average, it does not mean that this is going to happen to the stock market, right? Everyone wants to be, the next fucking Warren Buffett. Everyone wants to, predict the outcome for the next, 59 months, right? 59 months. Everyone wants to look right. What is the projection for, 782 days down the road? Now, all I want to do is do my homework, do my data research, do my technical analysis. What does the next day look like, right? Because we have to take it day by day as a trader. And even swing traders, what does it look like for this week? What does it look like for tomorrow? Let's take the information, let's digest it, let's be calm about it, and let's go ahead and trade it day by day, because there's money to be made each and every single day. If it's not in tech, then it might be in small caps. If it's not in small caps, it might be banks. If it's not in banks, it might be utilities. Now, mind you, I only predominantly am going to trade technology. So everything that I personally trade is going to be technology. That's my forte. That's what I like. NASDAQ 100 stocks got the biggest ranges. You can make $1, $2, $3 very, very quickly intraday. I don't need to sit here and accumulate stock for the next 10 years for a 10-point move on a stock like Coca-Cola, right? Like I'm not going to sit here for, and I'm just making a joke about it. I mean, I'm sure if you invested in Coke 50 years ago, you made tremendous amounts of money. But if we look at Coca-Cola, right, just for an example here, and I'll just go to a weekly time frame. Okay, go to a weekly time frame. If I go back over a year or 2 years on Coke, right? So 2 years ago, Coca-Cola was trading around $50. I just want to make this point very fucking clear. 2 years ago, Coca-Cola was trading at $50. 2 years later, Coca-Cola hit highs of 67. So even if I said I'm the most perfect person and a perfect investor ever, I did a 2-year swing trade on Coca-Cola. Coca-Cola is only up 20 points in 2 years. Guys, as a trader, you can take 5 points a day out of a stock like Tesla. You can take 10 points a day out of a stock like NVIDIA. Why the hell do I want to have capital tied up for 2 years to make 20 points? I'm just making a general reference point. Again, nothing against investors. I know a ton of people who have been investing for years, who have a shit ton more money than I do. Okay, so there's no knock on anyone who does any long-term investing whatsoever. The only thing is that that's not my style. It doesn't meet my personality trait, okay? I'm a mover and a shaker. I like things to happen. I like things to get done. I like to look at something. I like to analyze something. I like to push my risk to the middle of the table. Either I'm right or I'm wrong. If I'm wrong, I want to get the hell out. But if I'm right, I want to take my money quickly. That's who I am. In going back to Coke here, Coke actually looks like a nice little swing trade. Coke actually looks like a nice little swing trade, guys, over 63. Over $63 on Coca-Cola has room to 64.84. I'm going to actually put this in a Discord. Some of the people do like to swing trade. See that? So, I mean, that's what it is. When you start doing your homework, you start coming up on different ideas here. Again, it's not going to move the fastest by any means at all. This is not going to move the fastest. But by doing a random analysis on a random stock to make a point on Coca-Cola actually looks like a swing trade, right? Now, are you going to make 10, 20 points? Of course not. But there might be someone interested in taking Coca-Cola from $63 to $64.80, from $64 or from $63 to $65. Why not, right? Now, it might take a month. It might take a month, but it's $2, right? It's $2. So let's go ahead and put this in. Nothing wrong with that. Low risk trade here, guys. Low risk trade, because on this swing trade here, right? So if you do have a smaller account or you are interested in swing trading, you trade names like this. Now, I'm not saying look to trade Coca-Cola on a week by week basis, but again, if the setup is there, the setup is there. But look at the risk that you have. Your risk would be on the weekly time frame, any close below the 5-day moving average, $61.70. Guys, you're risking $1 on a trade. You're risking $1 on a trade to make a potential $2. That's a 2-to-1 risk to reward ratio. That's not a bad trade, right? Again, you're not going to allocate all your entire portfolio, all your capital to Coca-Cola, but put a little money aside, right? Again, I'm not a financial advisor. Don't take my word for it. Coca-Cola here over 63 has $1.50 in it. Low risk trade. Slow mover, guys. By no means are you going to get in this trade and become a millionaire overnight. I'll tell you that much right now. Treat it as such. Treat it as such. Treat it as such. Especially if there's a rotation, right? Especially if there's a rotation. Some of the safer names. Taking a look at Apple here. Apple coming down to its 5-day moving average. Apple bouncing off of the 5-day moving average. Anything below tomorrow again, right? So again, all the research that is done after lunchtime goes into tomorrow's trade. So tomorrow on Apple, any confirmation below today's lows, which is 160, has room down to 156. Again, does not mean that we are going to test 156 in one day, but how you play it is if we do start to confirm, right? If we do start to confirm 160, you take this short trade and you start selling into the next area of demand. So if we look at the daily chart here, because the weekly chart looks set up. So for example, right, if we look at the holding pattern that we have here on Apple, look at this holding pattern here on Apple. Let me bring up the pencil here. If we look at the holding pattern here on Apple, okay, if we start to confirm, right, and that does not mean that we don't do this. That doesn't mean that we don't go higher, but we have to be ready for both sides, right? Especially when we're trading, and especially when you're a short-term trader. You can't just be long bias and you can't just be short bias. So if we start to lose 160.30, right? If we start to lose 160.30, we will have an initial push down to around 159.30, which is $1 worth of room. So in that $1 worth of room, you can definitely take some profits on the way down. Any close on Apple below 159.31 then opens up the cycle for a potential move down to the 150s. 154, 156 makes a potential move down. This is when you're going to want to swing. We get below 159.20s, 159, and then we want to swing that into 154 potential. Again, 3-4 week hold time on that, but you start selling into this 50-day moving average. So we don't hold it and we don't tell ourselves, well, we have to come down, right? The market doesn't have to do anything. That's what I don't like about some people. They think that they take trades and it has to do something. It doesn't have to do anything. All it has to do is confirm this level here, and we understand we got about $1 in that trade, okay? We also understand that if we do close below 159, potentially we have 4 or 5 points down. And it doesn't have to come down there, but if it does, we want to start selling into that, locking in profits along the way. Now, if we look at the play to the upside, okay, because we are bouncing off the 20 SMA, well, we got to get over 163.25, okay? We need to close over 163.25, and then we have potential to start testing 165. That's going to be your long position. Until we do either one of those two things, there's nothing going on Apple. We'll leave it alone. Leave it alone until we close below these lows, or leave it alone until we get back over the 5 and 10 day moving average. It's simple as that. Simple as that. Let's come back to our NVIDIA trade here. That NVIDIA trade we were looking off of bounced perfectly, right, on the daily. And the same thing on the hourly. Bounced perfectly, reclaiming the 5 day moving average here. Got a ton of work to do. NVIDIA does not look good into the long side until we start to get over 272. If we look at this 5-minute time frame here, go to a shorter time frame here. NVIDIA giving you a little bit of a scalp signal here, 269.14 into 269.88. So again, guys, 20, 30, 40, 60, 80 cents on a scalp on NVIDIA. It's going to be a little risky just due to the fact that you've got so much levels of supply and demand up here, right? But what you essentially would be looking for here is a break over 269.15, and you want to sell into 269.67. Is that enough room for me? Of course not. That's not enough room for me. It's not enough room for me. But some people are okay with that, right? If you're okay with taking 40 cents, 50 cents, be my guest, right? Be my guest. What's your stop loss? Well, the loss of the 5 day moving average, 268.64. So essentially you're risking about 50 cents on a trade to make 50 cents. It's a one-to-one R to R, okay? It's not worth it for me, but again, if you're experienced, and I know a ton of people that would take this trade 9 times out of 10 and they would make money 9 times out of 10. It's just not my style though. That's not my style. So for me, what I would be looking for personally, I would be looking for a loss of this hour's lows below 267.68, right? And I want to play that into 265. If we don't get it, that's okay. We don't take the trade. It's not rocket science, right? It's not rocket science. So many times people analyze a chart and they come up with levels, right? They come up with levels and then they feel like they have to take the trade. You don't have to do anything, guys. You don't have to do anything. So again, to clarify, below 267.72 on NVIDIA has room down to 266.68, which is $1 worth of room there. You take half your profits off the table there, and then you play into, you use a break-even stop, and then you play into the bottom wick here, low of day 265. That's how you would play that. To the long side, NVIDIA's got work to do. Again, like I said, I don't even get interested in NVIDIA to the long side until we break 272.62. Let's take a look at Amazon. I have not looked at Amazon all day today. Amazon. Lakers with a hell of a win yesterday. Just saying. Dodgers need to get their pitching in order. Just saying. So what are we looking at here? We're looking at Amazon. Day's lows here, confirm that first hour candles lows here. This is also another great strategy that I teach for people that are looking to trade like the first hour of the market. Definitely jump in Evolution Traders. I'll teach you guys a strategy. You can literally sit there between, I'm in California, so 6:30 a.m. to around 7:30 a.m. And you can probably catch a trade 3-4 days out of the week. One trade, 3-4 days out of the week, only trading the first hour. Again, it comes with risk and it's not going to work all the time, just like any strategy. I don't care if someone is trading VWAP, fibs, I don't care what you're trading. Not every strategy works, but it's going to give you a setup every day. I'll tell you that much. It's going to give you a setup every day. But anyways, we got our setup here right off the open. This opening range candle went from $99 on Amazon all the way down to a price of $98. So again, dollar move there, right? Dollar move, depending on your size, could have been a hell of a trade, right? Someone who's taking 100 contracts and taking a dollar move just made a lot of money. Someone who took one contract, maybe not so much, right? But again, there's no difference whether you're taking one contract or 100. It's no different. I trade 10 contracts is no different than someone who trades 100, and is no different than someone who trades one, right? Everyone has different account sizes. Everyone has different kind of goals. Everyone has different emotional patterns. So what I would be looking for on Amazon to the long side, we got to get over 99.70 on Amazon. Then potentially we have room up to $100.50. So again, not that much room. A lot of stocks look better down for tomorrow, right, than they do long for tomorrow. But anything can change. Anything can change. Microsoft has been strong. Microsoft overall has been very, very strong, and it is actually up $3 on the day, 1.5%. So if we look at Microsoft, and I'm going to have to alert this now, over 286.95, actually 287.35. We can call this 287. Microsoft looks really good. Mr. Softy looks decent, guys. Mr. Softy has been strong all day. Mr. Softy. So if you look at the daily chart on the Softman here, getting rejected, or at least retrying to test the 5-day moving average. And I'm going to re-emphasize this again. Whatever you like in the afternoon session after lunchtime, you're going to fucking love tomorrow. You're going to love it tomorrow. So if you like Microsoft here at 286.50, you're going to love it tomorrow at 287.35, right? Tomorrow over 287.35 has room to back to 289 and 290. Now, again, we could absolutely explode going into the close here. So if you want to take a little bit more of an aggressive stance on the Softman today, what you would be looking at is the hour candle, okay? The hour candle, and you would be looking at taking out this top wick, right? Boom. So this 287.35, 287.40, if we start to confirm this, Microsoft has room to 290. Your stop loss would be anything below the 5-day moving average. So it's about $1 worth of risk. Understand, I trade NASDAQ stocks. You're not going to be able to tighten up that stop loss any more than that unless you're playing a smaller time frame, right? So you can get tighter on your stop loss the smaller of a time frame you go, but just understand the moves are not going to be as big, right? They're not going to be as big. You know, Mr. Softman came down, tested the bottom of the channel. This is a great bounce spot that I kind of teach a lot of people in Evolution Traders. But we come down to this bounce spot. I love these plays where we come down, test, and then we wick up hard. As soon as we start to wick up hard and we get that confirmation over that wick is an indicator to go long. 283.35 gave us a trade all the way to 286. That's a hell of a move there from 283 to 286. Anytime, right? So, you know, I tell the guys all the time, wait for those areas that, you know, on an intraday perspective, wait for those macro areas like down here, right? You want to come down, test these levels. It was also the pre-market lows here, so kind of a double bottom. And then when we fucking wick off hard like this, right, you have a clear stop loss. Your stop loss is below there, okay? So when we come down and we test and then we lose this area, but then we wick up hard, your entry is here over this candle. Your stop loss is here, right? Low risk trade. We're risking cents to make dollars. You risk cents to make dollars in this business. It's not about buying here, letting it do this. I hope it comes back. Get out of here with that. Get out of here with that nonsense. If you can't manage risk as a trader, you are fucked. And that's the honest truth. That's the honest truth. And I have days where I'm down. I'm down bad, right? But you have to walk away from the chart. It's not your day. It's not your day. It's not your day. You don't allow yourself to be down $400 or $500 and turn that into down $3 or $4 grand, right? You don't do that. We can manage, you know, a couple $100 here, $500 there. We can manage that. We can't manage, you know, taking $2,000, $4,000, $5,000 hits on a day in and day out basis. It's just not going to happen. It's not going to happen. So again, market not doing too much right now. NASDAQ futures currently down 8. Dow up 178. So there's a little bit of rotation, and this kind of started yesterday, right? I seen that rotation. They were actually coming into the IWM as well yesterday, right? So if we look at the IWM today, flat. We look at the Dow up 160. Again, keep in mind, Dow is only 30 stocks, right? So being up $100 or 100 points on the Dow, like a flat day, it's not necessarily that much, right? But essentially, right? Where are they kind of going? Into the safer names, right? The safer names. What's down today? Tech is down today. Tech is flat and tech is down today, right? So you have to know where are they putting their money. They mean big money, right? Not you, not me. We don't have enough money to move the market. The market as a whole, where are they putting their money? Okay. And that doesn't mean that we're going to completely outflow from technology and into the Dow. That just means today, right? Today, tomorrow could be different. Today, we're kind of hanging out in the Dow stocks. We're kind of hanging out in the small caps, right? Safe, right? Safe for the day. Now, that doesn't mean that there wasn't money to be made in technology. I mean, definitely could have made money in technology, especially on something like Tesla. Again, I keep going back to this Tesla trade here. Tesla testing the day's low here. Testing the day's low on Tesla. What we're looking at here is if we do start to lose this Bollinger Band and we lose the day's low, we definitely have a shit ton of room to come down on Tesla. Tesla's next demand zone on an intraday perspective is sitting at around 178. Now, not saying that we're going to come down to 178 today, but definitely into tomorrow, this looks like a fantastic opportunity on Tesla if the market continues to pull. So if you were playing options on something like Tesla, you could essentially go for like I'm looking at the strike prices now, like a 180 put or a 177.50 put into tomorrow. But again, if you're going to chase this move today, I would highly recommend treat it as a scalp and then allow it to set up tomorrow to get into the trade short. Now, if you're currently holding short from say 184 or from our original entry this morning in Evolution Traders, that entry was sitting at around 188, well then definitely hold a runner into tomorrow. That could be a potential 10-point slide to the downside just overnight off our original entry, right? So our original entry came in at around 188, 187. Now, like I stated earlier, I am already 100% completely out of this trade just because I locked up my profits. But again, right now we have just broken the day's low. So if you are going to get in of the break of the day's low, what you want to see here now, okay, being that this 5-minute candle closed has broken the day's low, we want to see this candle continue to close underneath the day's low, and then we're going to need to see either a pop and get rejected back at the 5 and 10-day moving average on a 5-minute time frame, and then wash out and take out the new low. And then now we can start to maybe think about swinging our position overnight. Just understand that anytime you swing, you're going to put on a lot more risk. You don't really have control, especially if you're playing options. You can't get out in pre-market if something is doing something a little fishy. But the 180 and the 177.50s look very, very good on Tesla. Very, very good on Tesla. So market is starting to pull now. Going to the futures markets here. Nasty pull, and of course I fucking missed it. The pull I was waiting for and I missed it. So again, futures are starting to pull now very aggressively, down 63 points. Again, just about 5 minutes ago, I was talking about futures right around that 50, up 15, 16 points, down to flat. And like I said, I forgot the stock we were looking at. We were looking at it. It could have been NVIDIA. It could have been NVIDIA. But when we were looking at it, I said, if the futures start to go down 30, 40, 50 points, that's the what you want to correlate, right? If you are short stock, right? If you're short stock, you want to correlate with what are the futures doing, pulling. And of course, boom, there was the pull. So that play worked out perfectly. This is where we were talking about NVIDIA getting in short, getting in NVIDIA short at the 268.80s, right? The 268.80s, that would be losing the consolidation here. Only went from a price of 268.90s, 268.80s, all the way down to a price of 267. Hell of a move. Hell of a move. That's a $1.50, $2 move. I hope someone that was in here earlier took that move. I hope you took that move. Because we talked about it perfectly. We talked about it perfectly. The play was to play it. And if we look at the hourly chart, because we were also looking at the hourly chart, the first play here was a loss of the previous hour's low, okay? A loss of that previous hour's low. So once we lost that previous hour's low here at the 9 a.m. low, this 10 a.m. candle came all the way down, tested the 268.30s, right? 268.13s, 268.10s. That's where we wanted to sell half size, right? Half size. Even if you only play 2 contracts, you have to sell half size at the level of demand and use break even as your stop, because you never know if it's going to come back, right? So we locked in now. This is now a free trade. And from 268.10 has dropped now another dollar. Another dollar. So this is a $1.80 move, a dollar and some change, right? Almost $2 move on the stock price here, and we don't have support until 266.30s. Not saying that we don't immediately bounce and reverse this, but technically this could be coming into 266.30s. That's a hell of a move. I hope to the guys that were listening at the time took that scalp position. You guys made some money. Congratulations. But again, continuing to pull here, the next area below this Bollinger Band, I would expect a bounce in the 266s, right? 266.10, 266.30. I would expect a little bit of a bounce. If we start to confirm this in the last hour, 265.25 is our stop. Again, if you are holding short, this is just a hold short into tomorrow. Again, go with size that you're willing to risk all the way down to zero. It should be a runner and it should be a break-even trade. I am currently up $65, only playing 2 micros on the NASDAQ here, 66, looking to take this profit very, very quickly here. All right, so we're out of that. We're out of the short scalp on the NASDAQ futures. Out of the short scalp on the NASDAQ futures. Again, at this point, this late in the day, it's just about taking your scalps, right? It's just about taking your scalps. So, you know, the setup that I was looking for here on the NASDAQ futures, if we kind of look at where we came down to on the day's lows, we kind of bottomed out here at around 12,975, and then we had an aggressive 2-hour bounce, right? Even almost 3 hours if you want to consider the 10 a.m. candle into supply. We did get rejected at the 50-day moving average. But what I was looking at here on the NASDAQ futures is, look at these 2 candles. There was a sneaky area, right? A sneaky area on this hour, right? So 11 a.m. Pacific Standard Time. Below the 13,058, if this candle was to confirm, we've already been rejected. We understand that, you know, we have not pushed up and got above supply. You did not have any support for at least 30 to 40 points down, right? There was no support for at least 30 to 40 points down. And you take your profits into this level of support, right? We don't assume that we're going to make a new low of day. We don't assume that. We have to take our profits here. We have to move our stop loss into profit or break even, and then we have to continue to play. Look at AMD. I got to look at AMD for one of the guys in the Discord here. Looking at AMD coming down towards these days lows here. AMD does look like it could go lower. AMD $90 potential here. I like AMD. We got to check out the daily time frame first. If we look at the daily time frame on AMD, $91.